I'm David Scranton, and thanks for clicking this video. Today, we're talking about financial moves that you can make heading into the fall. So we want to bring in our special guest, Peter Schiff. He's the chief economist and global strategist at Euro-Pacific Capital, which is a division of Alliance Global Partners. Pete, thanks so much for being here with us on the income generation.
Oh, Dave, thanks for giving me the opportunity to come on your program.
Gosh, we spoke April of last year, right about the time that this COVID-19 crisis hit, right? And the stock market was terrible. And of course, you said it's because we intentionally shut down the economy, and you were correct. But are you surprised to the extent to which the markets have recovered and created new highs over the last, 16 months?
Well, nothing surprises me at this point. If you print enough money, you can get asset prices, nominal prices to go up. And, this is really the mother of all bubbles. It's the everything bubble. And so that's what's going on. But what doesn't surprise me is the underlying weakness of the U.S. economy, the incredible increases we've already seen in producer and consumer prices, and we're just getting started. People are going to have to deal with much greater increases in the years ahead.
Sure.
Maybe what surprises me is how few people can actually understand what's going on. People are still oblivious to economic reality.
So, most people are hearing the news that the economy is doing wonderfully well, but you're saying the economy is having problems. Can you just elaborate so our viewers can understand why you're saying that?
Well, if you look at our trade deficits, they're all-time record highs. That's a big sign of a problem. Our economy is incapable of producing the things that we consume. Our budget deficits are at all-time record highs, so the government is borrowing more money than ever before. In a strong economy, we wouldn't need to borrow so much money. The fact that the government is relying on so much debt shows you that there's an underlying problem in the economy. Also, you have a lot of Americans that are absent from the workforce. Labor force participation is still very low. So you have a lot of people that prefer receiving government checks to paychecks because, to get a paycheck, you actually have to show up and do some work. But to get a government unemployment check, you don't have to do anything. You can stay at the beach and get paid. So the economy is very dysfunctional. They point to all these supply shortages. But that's evidence of a weak economy. We can't produce stuff. All we can do is spend money that the Fed prints.
Peter, when you were here just 16 months ago, you talked about inflation, how the government is essentially stealing money from American citizens by eroding the buying power. And for the last several months now, we've started to see that inflation. Question is, are you in the camp that it's transient and temporary, or do you think they're creating more of a long-term inflation problem with what they're doing economically?
Well, there's absolutely no chance that it's transitory. Remember, the Federal Reserve told us that the subprime market was contained. So inflation is as transitory now as the subprime problems were contained, back in 2008. In fact, the only thing that's transitory, I think, is the fact that inflation is going to get a lot worse. So it's just going to go higher from here because the government is spending all this money. Biden just unilaterally increased food stamps by 25%. Where does the money come from to pay for that? They've got this $1.2 trillion infrastructure bill. Where's that money coming from? They got another $3.5 trillion bill. Where's the money for that? Meanwhile, the cost of Social Security, Medicare is exploding. You have fewer people who are working and paying taxes and more people retiring every day. Where's that money coming from? It's all going to be printed. But just because the government prints money doesn't mean we escape taxation. We're just being taxed in the form of inflation. So instead of the government taking our money, they're taking our purchasing power. Everything we want to buy is going to cost more. And as a result, we're going to buy a lot less.
Okay, so all right, you said it there. As a result, we're going to buy a lot less. So I look at two things. To play devil's advocate, first of all, it's been slow, but eventually the supply chain issues should get corrected because corporate America wants to sell more goods and services if the demand is there for it. And secondly, I question what has really changed fundamentally for demand for goods and services. Is it possible that maybe just the inflation as we think about it is shorter term, but we create more asset inflation, like what's happened over the last year, and that continues, or real estate and stock prices just keep going up because people aren't spending the money, they're just investing it? I mean, do you see that as being a possible outcome as an alternative to traditional inflation?
No. Well, inflation is an expansion of the money supply. There's no new inflation or old inflation. That's all it is. The government inflates the money supply and prices respond by going up. Or, maybe prices would have gone down, but because the government expanded the money supply, prices don't go down. I mean, the government robs us of our purchasing power. Whenever the government creates inflation, prices are higher than they would have been absent that inflation. And so that is how the tax is paid. But, I don't think the problems can be blamed on supply. I mean, that's always the case. If you print a lot of money, you can always say, well, there's not enough supply. There's too much demand. Demand has to come from production. But if we don't produce to generate demand, if we just print, prices go up. I mean, there's never going to be enough supply. If we gave everybody $1 million and they all tried to buy a Ferrari, we could say, well, there's a supply shortage of Ferraris. Of course, there's not enough to go around. The price is going to have to go up if you just give everybody a bunch of money.
Okay. So, you have really two types of inflation, the way I like to think about it, where, again, you've got prices going up for goods and services, and then you have asset inflation because not everyone's spending the money, right? Some people are saving it, investing it, and that's what's driving up real estate prices and stock prices. So our show today is all about smart financial moves for members of the income generation, those 50 and over, for this fall. Bottom line, your crystal ball, do you think the stock market's going to keep climbing through the end of the year, or do you think people need to be really, really cautious with their stock exposure over the next 4 months or so?
Well, they need to be cautious with their stock exposure, regardless of whether the stock market continues to climb. And, it's really not asset inflation. Again, inflation is the expansion of the money supply, but prices go up. And what we have seen is asset prices have risen a lot more in the past anyway than goods and services prices. So you've seen that inflation reflected more in assets. And the other problem with that is when those assets, let's say, are your home, a lot of people will use that as collateral to borrow money and then spend that. And to the extent that people see the value on paper anyway of their stocks going up, they may feel less of a need to save. And so they may spend money that they otherwise would have saved because they're operating under the delusion that they're getting rich with the stock market going up.
And people borrowing more home equity means just it increases the chances of us potentially having another 2008 type crisis. So Peter Schiff, we got to leave it there for now, but thank you so much for being back with us here on the Income Generation. It's our pleasure as usual. And a big thank you to you for watching. Bottom line is, if you enjoyed this interview, please make sure you give it a thumbs up and subscribe to our YouTube channel for new content each and every week.